Hi, my name is Richard Dix, and this is How Did That Happen? A podcast where I look at everyday things or events and try to figure out how they came to be. Every week I will research one topic, and by the end of the episode, I hope to truly have the answer to the question, how did that happen?
Hello, and welcome to another episode of How Did That Happen? This week, we are discussing the stock market. Are there wolves on Wall Street? Does money never sleep? I don't answer any of those questions. But come along for the ride this week as I ask, the stock market, how did that happen?
Before I get into the history of the stock market, it would be beneficial to explain what it is exactly, or at least what a stock is. A stock consists of the shares into which ownership of a corporation or company is divided. It's pretty much simple. I'm not going to go any deeper than that. In the 1100s, France created the Courtier de Change, which was a group of men who handled agricultural debts on behalf of the banks. So they were the first iteration of an institution that dealt in the division of profits. In the 1300s, in Venice, Italy, there is an influx of merchants looking to trade in government securities. These people would write their deals on slate and would therefore be solidified. This practice began to spread throughout Europe, and one place in particular was Bruges, which is in Belgium. The Van der Beurs family ran the Terburgs Inn, which was actually a series of different buildings that foreign merchants would stay in while they were doing their trading. And since there was no designated place for the trades to happen, they often occurred at the inn. It is believed that this is where the term bourse for stock market comes from. The first French stock market was called a bourse, and the Italian stock market is also called a bourse. It was called Borsa Italiano. This leads to the first stock exchange being created in Antwerp, Belgium in 1531. It should be noted that around this time the Royal Exchange of London was starting. It was modeled after Antwerp and opened by Queen Elizabeth I in 1571. At the stock exchange in Belgium, there were different houses for different countries, but there was no actual trading of currency. The trading was done in bonds and promissory notes. Another iteration of an early stock market emerged in the 1600s when ships began sailing east to get goods and spices. The ships had to be paid for and supplied, so the ship's owners would seek investors to back the voyage they were heading on. Basically, investing in the ship entitled the investor to a portion of the profits the ship would then make when it returned. This began on a larger scale when the Dutch East India Company became the first publicly traded company in 1602. It's hard to parse out exactly who was first, because a lot of sources do say that the British East India Company was created in 1600 and the Dutch East India Company was made in 1602, which would make Britain's the first, but in the same articles where this is said, they continue to claim that the Dutch was the first. And I believe that this is because they were more successful early on. That's why they say that they were the first. They took the game to a larger scale by allowing people to invest in the company as a whole as opposed to in individual ships. The creation of this company also allowed investors to possibly receive dividends instead of just their money from single voyages. The investors would receive their stock on paper.
The return on these investments was usually good, but the Dutch East India Company did not always pay in money. The investors would sometimes have to settle for whatever produce or spices came back from the ships. People did not like this, and the other trading companies took notice and decided to only pay in cash. Over the next 200 years, the Dutch East India Company would grow to become what some have called the first military-industrial complex. This is because their trading had grown so large that it required them to have armies and broker deals with Asian rulers. This had gone past the initial idea of trading for spices. At the turn of the 19th century, things had started to sour for the Dutch East India Company. This was due to a number of wars, as well as having their company nationalized in 1795 by the new Batavian Republic. This nationalization resulted in their charter expiring. Most of their posts in the Pacific then fell under the British East India Company. The process created by the Dutch East India Company would be imitated all throughout Europe, and this, combined with what was happening in Antwerp at the first physical stock exchange, is what leads to many countries creating a version of it for themselves. Like the London Stock Exchange, which followed its predecessor, the Royal Exchange of London in 1801. The New York Stock Exchange started in 1792 with the Buttonwood Agreement. It was signed by 24 stockbrokers, and it established the foundations of the New York Stock Exchange. The agreement got its name due to the fact that before the New York Stock Exchange, these same stockbrokers would meet under a Buttonwood Treaty to do their trading. And that is how the stock market happened.
And now it's time for the roundup. The roundup. The roundup. And we're going to round it up.
The first type of trading happens in the year 1100 in France, when the banks create the Courtier de Change to oversee the buying and selling of field harvests. This leads to a physical space being set up in Belgium. Before there were actual stock exchanges, these trades were conducted at inns. One famous one was run by the Van der Beurs family and is believed to be where the term bourse for stock market originated. Like I said, the first physical stock exchange was in Antwerp, Belgium, and it was the model that all others were built upon. As time goes on, we see countries developing stock exchanges for themselves, and now it is as much a part of life as eating or drinking.
Things I didn't know before. Things I didn't know.
Okay, so let's see. One thing I didn't know before was that this is completely off topic, but I don't even know how this came up. But that the Bloody Mary, the term Bloody Mary comes from the Queen Mary, who in the 1500s was burning Protestant people at the stake for being Protestant and not Catholic. But that's where that term comes from. I don't even know. I forget where that came up in the search, but I wrote it down as soon as I saw it because I was like, that's wild. Um, let's see. The original stock exchange in Antwerp, one that we talked about, built in the 1500s or late 1400s, is still standing today. It is still around. So that is some well built construction. This has been another episode of How Did That Happen? I am your host, Richard Dix. Thanks for listening. Be sure to like, rate, and subscribe. I'll see you guys next week.